It's about that time of day again. My name is Joseph. It's Thursday evening already, April the 20th, 2017. Welcome back to your nightly newsletter. We're covering crude oil, S&P, gold, euro, and FDAX tonight. Crude is bearish with a wedge, but we have 4 levels of support on the chart for tomorrow, so our plan is to look for a two-legged correction to keep focused on selling high. Basically a rinse and repeat of what we saw today. S&P is bullish and trying to retest last week's high, but we have 3 major resistance levels in the chart that we've got to address first. Gold is trading inside of a range tonight, so our plan is to fade the edges, but a recent change in market sentiment is telling us to be watching for a possible bull breakout in tomorrow's session. Euro's bearish with a spike in channel tonight, but we have 2 levels of support telling us to beware chasing this move lower and look for a trap high up at some key resistance levels waiting overhead. And the FDAX is bullish with a sweet spike in channel tonight, and we have 2 clues in the chart telling us to make sure we buy as low as possible tomorrow to avoid a possible fake out breakout. We're ready to wrap up what has been an incredible third full week of the month of April. As always, got a great newsletter in store for you guys and gals tonight. Before we jump in though, I do want to remind you the only place to watch the full-length version of this newsletter is on our blog here at sidewaysmarkets.com. If you're watching the video right now on our YouTube channel, not to worry, there's a link in the description of that YouTube video. Dig into that YouTube video description, grab that link, follow that link over here to the blog at Sideways Markets for the full-length version. It's only a small snippet on the YouTube channel. While you're here, don't forget, join the mailing list. I'll send you an email every evening when our nightly newsletter goes live. Follow me on social. Right below the video, lower left-hand corner, you can find many different ways to follow me on social media. I'm always posting important charts and links and updates throughout the day. Grab those charts for tomorrow's session. That's right. How easy is that? All the charts in tonight's video are available for download right below the video tonight on the blog. And please don't forget to grab your free pass. You're going to learn more with me in 90 minutes on that free pass. I can virtually guarantee that, right? Grab that free pass in the upper right-hand corner of that website. If you're not yet a member here at School of Trade, come join the free pass. And don't forget, brand new here at SOT, not to worry, we get a great frequently asked questions. Check out the FAQs. And please don't forget, don't be a stranger. I'm always here hanging out, waiting to answer your questions. Use that live support tool on the right-hand side of the website and holler at me if you got any questions along the way. Boy, it's been an incredible, incredible year so far. We're ready to wrap up this third week of the month of April. Tomorrow's, of course, Friday the 21st. Look at the major news here for tomorrow. We got nothing major here coming out in the overnight Asian session. We're not going to worry about that too much here going into Friday. Tomorrow, of course, Friday the 21st. Got a peppering of news in London. 3 o'clock, 3:30, 4 o'clock, 4:30. Right, those, of course, be the big news events tomorrow in London. And of course, if we go into the U.S. session tomorrow, we got 8:30. We're going to hear from the CPI in Canada, right? The big news tomorrow, though, will be in the U.S. session at 9:45, the composite flash. And most likely the big headline news tomorrow will be the existing home number, right, at 10 a.m. Eastern time. Mark your calendars for that tomorrow. If you get the London session on your schedule for tomorrow, make sure you're aware of that peppering of news early. If you're with me tomorrow morning in the U.S. session in the trade room, right, don't forget 9:45 and that 10 a.m. news will be the headline number for tomorrow's Friday session. And of course, I want to remind you, whenever we have a Friday session, Fridays are always early in, early out. Traders do crazy things at the end of the week, at the end of the day, at the end of the week, at the end of the month, right? Traders take bigger risks. And when you combine that psychological impact along with lower volume on a Friday, right, it's a recipe for disaster if you don't know how to control your emotions. So be careful tomorrow afternoon, right? Nothing new after 11 o'clock on Fridays for me. I always want to make sure, right, I'm in and out early of any potential trades on Friday mornings. You're more than welcome to hold something into Friday afternoon, right? But again, that cocktail of low inhibitions by traders and low volume is a recipe for a disaster if you don't know how to control it tomorrow. So be aware of that. Get at it early, get out of there early, and it's probably beautiful weather out there where you guys are. Hopefully it is, at least in the northern hemisphere, right? Hopefully you're having a great weekend ahead of you, and get out of there and enjoy the weekend. Don't forget, we'll be with all of our students tomorrow, 8 o'clock Eastern time in our trade room. I hope to be able to see that, to be able to see you guys with you tomorrow morning, 8 o'clock Eastern time, as we wrap up what has been a fantastic, fantastic week. Let's jump in. Let's not waste any time here. We got crude, S&P, gold, and of course we can't forget about the euro and the FDAX tonight. How about some S&P? The E-mini is bullish and trying to retest last week's high before we hit the weekend. But we have some resistance levels that demand our attention first. The big concern is this falling resistance trend line, which tells us we need to get back above this resistance trend line, right, and then use it as support for a move higher. Next, we got to worry about this double up. The double up's a major objective for the bulls from earlier today. Last but certainly not least, look at this trading range. This trading range is a great clue telling us to look for price to pull back a little bit further so we can really buy low for a move back up to retest the high. Boy, a lot of really great clues on this. I think one of the big clues on this chart is this sucker right here, the prior week high. We're going to see a few more of these tonight on the newsletter, and as always, I appreciate you sticking around with me on a Thursday afternoon, Thursday evening, wherever you are, right? So we'll talk more about that later on in the video. Stick around for that. But hey, tomorrow's the end of the week, and anytime we go into the end of the week, we start watching last week's levels, right? Last week's high and low. Also, right, anytime end of the month, we start watching last month's high and low, right? They start acting as price magnets. So that prior week high is definitely just, again, once you can see it on the chart, then all of a sudden people start kind of manifesting that price up to get where their eyes are, right? That's why they always say, right? Steer into the turn. Keep your eyes where you want to go, right? Because once your eyes are on it, you'll find a way to get there. So, with that said, prior week high is definitely a big kind of carrot at the end of the proverbial stick for those buyers. Also, it's got to be a breath of fresh air to get a little bit of bullishness back in the market. All these bears have come out of hibernation on the E-mini over the past week and a half, right? There was some definite perkiness to the market here today. Might have been a little bit of short covering after that big move down from yesterday. Remember we talked about this last night's newsletter. We were 4 legs down in last night's newsletter, so we were definitely expecting to see a correction. It definitely corrected today. So correction turns into a strong bull channel here today, right? That bull channel now. You know, I'll tell you, you probably could have looked at this instead it was a bull spiking channel. So if you looked at that as a spiking channel, right, I definitely would agree with you on that. It never gave you that break and that nice deep pullback, and so that forced you now to keep looking at this now as a channel. So good looking channel there, and of course here we are now at the low of that channel, and this is a beautiful place to want to be a buyer, except we have a lower high, and that lower high creates that falling resistance trend line. That falling resistance trend line is a big deal for those bulls, right? That's the first clue. We definitely want to get back above that trend line and then use it, right? And then use it as an area of support. That's one big clue here for tomorrow. Big run up. I'm going to go out on a limb and guess this is a trading range. We really don't have double tops and double bottoms yet on it, right? So it's not really a well-proven range yet. But, you know, we talk about this quite a bit. Whenever a market runs up like this, pulls back, and then retest the high, that low right there is a big psychological level. There's stops waiting there. There's swing traders waiting there to buy. And so we'd like to buy that dip right back again, you know, or even better, right, get below it and then whoop, right back up, right, to retest the high. So think about that possible trading range here. I realize it's not confirmed yet, but this is that up, back, and there's that range, right? So we'd like to see this price below that range so we could buy low tomorrow. I think what might be the big clue here, might be the big, you know, I think this trend line's probably the big deal for tomorrow. We got to get through that and then use it. At least that will allow us to buy low. I think another thing to consider here is that double up. The double up, you know, I have to say, I was on the fence as far as what was more actionable here going into tomorrow's session. If you measure these up, you can see 1, 2, 3. I mean, I don't like to measure measured moves based on just wicks of candles, but you can kind of see how that little candle right there gapped up, pulled back. So on a faster time frame, that would have done that, right? So, Again, I think I'm splitting hairs there a little bit on that one, but boy, it really makes a lot of sense when you see what happened right at that triple measured move. So, like I said before, I think the double up is definitely there. It's a big strong move, first two swings, right? Double it up there. You can definitely see they respected it, but I think the double up will be the last thing on my list to really worry about for tomorrow. I think just buying low below this prior swing, really buying below this trading range, and really trying to get this trend line to behave for us, right? Trying to get that trend line to behave for us. So the idea is pretty simple. If it pulls back here immediately, we still have to worry about that trend line. So really, if it pulls back nice and deep into the battle zone, sure, now we have some extra space here until we're running into that trend line. But I'll tell you, those big moves down like that, those oftentimes end up going whoop and right back down again. So you really want to be careful. That falling resistance, it's a layup. It's a layup, or it makes it easy for us to potentially see a full trend reversal tomorrow, which we'll talk about in a moment. But the reality, though, is that trend line, if we can get it down to the battle zone, sure, I can be a buyer here. But again, watch yourself, because that trend line gets closer and closer, right, as it takes more time. The real easier trade here would be, can we get above it and then back over? Now, as you can see, that may take some time tomorrow. Right? That may take some time. We may find ourselves, right, down, back up, and kind of grinding until we get far enough away, right, that these buyers finally take this thing higher. So we're going to really have to dig our heels in tomorrow, stay patient, not to buy high, and use that trend line to the best of our abilities. So we know if price goes lower, right, we have a shot here, but be careful, not much room. We'd like to get it back above that trend line and go from there. That would really be the picture perfect scenario as the price pulls back tomorrow. Now, with that said, when it does pull back, if it really goes strong, then now we have potential now for what we call a trap high, which would be a two-legged move up that doesn't quite break that trend line, and then wham, right back down. So you want to really watch for that move as it goes lower, right? You're probably not going to be able to see much on the initial move down, just because that'll act like profit taking. But what will happen, though, is it'll be right as it rolls over above that trend line. So watch above the moving average, watch above that trend line, and watch and see what happens. Trust me, if we get back above it, you're going to see buyers hold it really quickly, right? But if we get back above it and the buyers go, no thanks, and they just give up on it, right? That's your cue right there. This market has turned bearish on you. And obviously here, right, the objective now is to go back and retest the low. Anytime a bull market turns bearish, look for that, right, trap high, and then retest of the opposite side. So we got you covered on that. Now, what if price goes higher, right? We would anticipate price trying to go higher here tomorrow, again, to kind of finish off that prior week high. So what's the plan for that? Well, again, we have to worry about this being a possible trading range. Now, did you watch the video on our newsletter earlier on this week on trading ranges, right? Trading breakouts. What we want to avoid is buying into that high, right? So here's what I'm looking for. Step one, strong breakout. Step one, strong breakout. Now, Joe, what is your definition of strong? If you're a new trader or anybody, right? The word strong is pretty darn discretionary, right? There's a lot of different meanings for the word strong. So my definition of strong is I want to get it up above the high of that range, right? Get the moving average up above the high of that range. Now, again, so step one, strong breakout. Step two, how strong? Get the moving average up above the range. Step three, pull back to the moving average. Step four, don't do nothing, okay? Step five, wait for the trap. And that is now with the proper signal candle, making sure you're above the high of the range. Don't buy into the high, right? Use the high of the range of support. But again, little trapola, right? Little two-legged pullback. I call it the fake out breakout pullback. It's one of the easiest ways, right, to find a reliable trading opportunity when you have a breakout, right? Because I don't want to buy breakouts. Breakouts, I realized 15, 20 years ago, right, when people actually called their broker to place their trades, right, breakouts used to work. They don't work anymore, right? The market's too efficient. People are watching at all times now. So you don't want to buy high, right? You want to buy low. So make sure we get that strong break up. That way we're not buying high anymore. We're buying low relatively compared to that breakout going higher. Again, the prior week high is, we have to assume, right, a major market objective. So keep an eye on that. If it does run up, oftentimes as we go into a weekend, we see a strong move up into a major objective. It turns into a bit of a trading range. Just buy those dips, right? Buy those dips. And again, it's a bull market right now, so you've got to see strength to the downside and then hold that pullback if we're going to call this a bear market, right? So do not try calling tops and bottoms. Wait for proof and then trade accordingly. What a great chart on the S&P. Hope you guys had a great week with me. And don't forget, we're going to do this together tomorrow at 8 o'clock Eastern time with all of our students in the trade room. Look forward to seeing you guys there. If not, same time, same place on Monday evening. Don't forget, while I have you guys' attention, grab that free trial at schooloftrade.com. Learn more about how I trade. You'll learn the who, what, where, when, and why on that free trial. Don't forget, learn more about our 3 levels of membership. And I'm always here. I'm working this weekend. I get some new stuff I'm working on for you guys next week. Hit me up on the live support tool. I'll be there to help out every step of the way, even if it's Saturday or Sunday. Guys and gals, excellent work this week. Been a fantastic week, fantastic month. It's been a great year, 2017. Hope you guys learned something. I hope you'll share this information with a trading buddy of yours, and I hope you'll send me some feedback to jj@schooloftrade.com. Guys and gals, I'm out of here for now. I'll see you guys tomorrow. If not, same time, same place on Monday evening. Adios, amigos. Bye-bye.